Welcome in, everyone. For those who haven't been here, it's just basically this is the first time I had questions prepared, but it's just going to be answering questions. Anything that comes up, I'll start with one of these questions maybe, and then ask a few from you guys, and we'll look at the other one too. But pretty informal here, just yeah, hanging out for a couple hours and answering any questions we have or whatever comes up. But we can start with what Rolling Sushi actually sent this first question, which was learn how I use skew when it comes to constructing certain option structures to capitalize on skew bias, like how you would analyze a ticker, determine its skew, figure out which structure to best put on given those dynamics. So to start, what is skew? Well, you got put skew or call skew, and we can let's use bowl as an example. Let's just see if they got some skew in bowl. So if we look at the filters are a little too different bowl. Let's just maybe not bowl. Let's see. Let's see. Just a minute. Let's find something. Let's go to ET. Let's go ETHA. If someone knows one that currently has skew, please feel free to tell me. But if not, I'm sure I will find one. Okay, well, we'll look at yeah, so looking at ETH here. I'll wait to see if someone has someone for me. Ethereum, ETH's got one. SPY will usually have negative skew. Okay, so SPY is a good one to look at because that's more general. Everyone knows SPY. Rolling sushi. Look at September. That's gonna be better because I'm gonna be able to find like a 20 on each side. So what do we got here? A 16. Okay, yeah. So if we look at a 16 delta put, 286, 289, and then we look at a 16 delta call, 185, 191. So exactly what Rolling Sushi was saying, negative skew because SPY has a put skew, where puts are going to give you more premium than calls. So, skew is something that's good to look at. I mean, that's important to kind of acknowledge where it's going. I mean, like you look at like this, you could do, you could potentially maybe do a Jade Lizard and you don't have to go, you can go for a lower delta on the put side if you did a Jade Lizard, lower your risk on the naked side. Well, because the put skew is so high and then take advantage of maybe a little lower call skew, but still route for over $5.31. So like that's an option in there. It's like yeah, you can use the skew to your advantage, right? Like, which is what Rolling Sushi is pretty much asking. So, another one that has positive skew would be gold. Gold usually has call skew. Um, and so you'll see like a 20 delta call is 157, 163, 137, 154. This is wide, of course, put, but it's after market hours, so it probably would be a little more narrow during hours. But you see, there's a slight call skew. So that's one where you could just buy gold and sell covered calls because that takes advantage of the call skew. You're gonna get more premium for calls, generate some income on those gold shares, and if they get called away, they get called away. But the ratio spread's a great one. I think if there's skew, period. I mean, I like ratio spreads, but like for a put skew like this, okay, well, I can sell a 620 just for you could sell a 620 two times. You could buy a 625 if you wanted one time. You're gonna get a $3 credit for this. I mean, and if you did a similar structure on the call side, you're not gonna get as much. So we look on the call side just to see if I can replicate something similar. I can do roughly. It's not gonna be great. Well, it's $5. Oh yeah, it's still $5. But anyways, we look at the call side. If we did a call ratio, I don't think we're gonna even get close to. Yeah, you get a 76% credit, and the deltas are a little bit lower than what I was looking at over here, but not much. Um, so Rolling Sushi, is that sort of answer your question, or was there? You allow me to elaborate if needed. A skew is not. Skew is important to pay attention to. And it's definitely something I'm working on paying more attention to because sometimes I don't look at as closely. Because it's definitely a smart idea to play into the skew. That's going to help give you higher credit if you're doing a short. I mean, obviously, if it's, let's just say, like, play it forward the other way is you could do like, it's going to be an expensive product, but like you could do a call diagonal in SPY because, well, the call skew's low. There's a put skew. So the calls are going to be cheaper. So you could do an upside trade in SPY because it's going to be cheaper to debit trade, let's say. With like a low IV rank like we're in, SPY's better for debit trades anyways. Did I answer your question, Rolling Sushi? Did I do that? Did I do that justice, or is there a little bit more? Did he leave? No, he's here. Be busy. Hopefully you can hear me, because I just talked a lot. I had to walk away. Oh, here's Holy Hexor, but I don't know. Hey there, Bone. Thanks for joining. Okay. Well, he might have walked away, so I'll follow up with him when he gets back in. Um, but before I get on, this is from Geo, another one of our members. The second question. Before I get on to that, if anyone else has any questions, I can answer that first, or if everyone just wants to hear the second question here, and then we'll go back to Skew if Rolling Sushi comes back and has questions, because he may have missed it. Any questions at all? Okay, why did I choose to do something? Maybe, or, yeah, go ahead. Holy Hexor. Oh, looks like Rolling Sushi left, so maybe he'll come back. Anyways, go ahead. And if you guys have follow-up questions on Skew too, please go ahead. Like, what the hell? I still don't understand what Skew is. Okay. Well, hey, Holy Exor, if there is a term you want clarification on, please don't hesitate. There are no like simple questions. Like no question is too simple. And as you see, like, help me out here if you have questions. So any terms you want clarification with, any like simple anything. Nothing is too simple to ask me about right now. Yeah. And that goes for everyone. Please don't be shy. This is literally, like I said, I have nothing planned other than these two questions, which might not be very much content. So please ask questions. I know what I do in the kingdom is different than what a lot of people do. So I just want to show people and answer questions and kind of, yeah, show you all that there's maybe a different way to trade than because I think a lot of people just buy puts, buy calls. So there's a lot you can do. Options are deep and wide, which is amazing and why they're such a good product to use and to be, you can do it, intelligently and with less risk and all that. But next, we can get a question from Geo, which is how do you decide what play to make? And he's saying, okay, a broken wing butterfly, a jade lizard, a call debit spread, etc. So I think part of that has to do with like, there's a not an endless, but there's maybe 20, 25 different spread strategies or strategies you could implement. And maybe you just narrow them down to like, okay, I like 4 or 5 of these, depending on what bias I have and what I'm looking to do. So I think that's the start. The other thing to do is to pay attention to IV rank and current implied volatility in the contract or in the strike. So like for example, if we looked at SPY, let's look at SPY. Look at SPY. Low IV rank 11, pretty low. Low IV in this expiration 16%. Okay, not a great candidate for a short premium trade like a Jade Lizard or a Strangle or a Iron Condor, Iron Butterfly, anything where I'm collecting a credit up front, not a great environment for that. Why? Well, IV is low, so premium is low. But then also, if premium is to expand, that goes against my premium selling strategy. So I don't want that to happen. So it's not a good environment. You're more you more want to do a short strategy when IV is high, IV rank is high. So a good example would be like Tesla. I mean, their IV rank currently is 5.8, but they're a 50% IV expiration. So, this makes for a good, if you have the capital, let's just say you wanted to do like a Jade Lizard. Okay, this is a good candidate. I'm going to collect a credit greater than the width of this credit spread. That's great. And then, of course, other credit spreads, anything you want to choose. That's definitely how I would narrow down if I use a credit trade or a debit trade. And long sushi, we'll get back to the skew. Okay. Okay. Yeah, yeah. Good that you heard most of it, rolling sushi. And then if you had follow-up questions, please feel free to type them. Just answering Gio's question here, how I decide what structure to put on. Um, a high implied volatility environment also can be good for like expected move butterflies, where you use a put butterfly or a call butterfly. That's because premium's high, so it makes it actually cheap for you to put on the structure. So like just to show you all, yeah, like you can put this on. So this is a 20 wide butterfly, put butterfly, $3 debit. So I pay the $3 debit up front. It's not other stuff here. So we look here. Okay, like I'm gonna pay $3 up front. Well, if I pin this correctly, we're looking at a $1,700 gain almost, just roughly, right? So that's one. I think a broken wing. Let me see if we did broken wing. I believe that you do want to double check. Yeah, so a broken wing's another one in a high implied volatility environment that you want to look at. Once again, this is a great one because you've got risk to the downside, no risk to the upside. You put this on, you get a dollar credit today, just short of. So if you're wrong and it keeps going up, then it's good. You just get this $93 credit. And if you're right and you pin the shorts, you're looking at like $1,000 plus the credit received. So that's a nice one. Another, so it's setting direction, and then to Geo's point, so at like a low IV environment, well, that's a good time to get in on a debit trade, because implied volatility is low, so therefore it's cheap to do a debit trade. Um, Other than like a butterfly, but like let's say like a diagonal spread on a lower IV stock, like let's just use gold. It might not be the best example because it's gold, but if we did a diagonal on gold, you know, this is a little too, let's find stupid diagonal. I see your question there, Bone. Just a minute. Let's just look at SPY. It's a diagonal SPY. It might be expensive, but yeah, so yeah, okay, it's a little expensive. Let's just look at Walmart. That's what I was thinking about, but I didn't like to do it because their earnings. Well, look at Walmart. IV rank 36, IV at 30, 25, 30, pretty low IV. So a diagonal, if I want to do a $5 wide diagonal here, you know, cost me $1.66. Very low debit to pay, low risk up front for a potentially 300 and something gain, $334 gain. So I think implied volatility is a big indicator on where I'm going to go in terms of short or long. And then, of course, butterflies, it kind of changes it, but that's more of a directional with high implied volatility. But I think that that answers Geo's question, and then in terms of like what exact structure after I make maybe a directional assumption or neutral assumption or like credit trade, it sort of just depends. I'll play around. I have a few in my pocket that like I like ratio spreads, I like butterflies, sometimes I like jade lizards, I like diagonals, and I like zebras. I'll just have those in my back pocket, and then like go like, okay, I feel like UPS. I feel like UPS is probably going to go up. I'm going to do a zebra on UPS, or okay, what would a diagonal look like? I kind of just play around with the few that I have. And I believe that answers your question, Gio, but you're not here, so you're gonna have to tell me later on. And then rolling sushi. If you, like I said, can you guess you don't? Oh, here you are, Gio. I just answered your question. Hello. I can speak on that again. I hope you literally just finished the question. But okay, well, maybe I will slightly repeat myself. I did. This is recorded. I did just finish. It's kind of funny that, but yeah. I see what you're saying here. And Bone, I will get to your question too. Yeah, Gio, feel free to type. I mean, I can repeat myself a little bit too. I mean, the biggest thing that I was saying was like for sure it's going to be implied volatility because if it's a higher implied volatility expiration and ticker, that's a good time to go short premium. And then, if it's a lower implied volatility, it's a good time to go like a debit trade or using paying a debit up front because if as I've said in other videos, like implied volatility is mean reverting. So if implied volatility is high, the assumption is that implied volatility will go down over time, which helps our short premium trades. And then, and what we're in terms of if implied volatility is low, the assumption is it's mean reverting, like I said, so it's going to increase over time, which helps your debit trade. Um, if it is a for short premium, for selling premium, yes, you want a high implied volatility every day. You're gonna, and yeah, I mean, higher implied volatility is funner. It's more fun. There's still opportunities on low in IV environment. I mean, we're in a low IV environment, but yeah, higher implied volatility environment, you usually you can do. You're going to get more money for your all those things. And yes, it is maybe make you more hesitant, but see, that's the thing is that there's actually like opportunities when implied volatility is high, but that's because a lot of people get scared. So it's actually helpful because you're like, hey, you're just being not aggressive, but you're just putting on trades. Some are going to win, some are going to lose. And then of course, there's days when I'm like, I just don't feel like nothing sounds good. I don't feel like doing it, so I just follow that. I'm not going to force anything. With that being said, and then just because you got into gym, I know you're in sushi typing, just in terms of like specific structure after I look at IV and determine what I want to do, directional then is going to be something I look at, and then I just pick. I have a few. There's probably endless amounts of structures you could put on, but I have a few that I like, and of course that's going to rotate, and so I just kind of use those few based on directional assumption or whatever. Where it's like, okay, I like a jade lizard over an iron condor. Like I just those are the ones that I gravitate towards. That's kind of helps me determine. Yes. So did I just answer that? She was saying, did you talk about when you decide on your approach, like I asked you yesterday? I believe that's your question here, which I think I spoke on. But if you want some clarity, I'm glad you're here. If you want some clarity or have a follow up question, please let me know. And Bone, I will get to you. Don't worry. Rolling Sushi one. I'll let Gio do his follow up. We'll finish this one. I think Bone for sure. Just while your Bone was asking, is there any video or educational channel on this? I don't know how to do spreads on my broken Weeble. I wouldn't know how to set it up and close it. So Bone, first and foremost, you want to make sure that it's you have level 3 options enabled. And then I will send you my YouTube, which has a couple videos, and I'll also send you a link to Tasty Trade in a minute here, which I think has good information. So Gio, I wasn't aware of the different approaches like Jade Lizard. Meaning, to answer that Geo, meaning what what are they, or yeah, what are they like? Because they're weird names. Don't get me wrong. Yes, GG. I will send the link to the Tasty Trade. In fact, I'll just do it right now. This is right here. So here's this Tasty Trade. This has good educational content. I like this. This gives you different strategies you can look at and kind of play with. And then I will send my YouTube link also, just so you all have it. It's got only a couple videos on there, but yes, Bone. I did a video not too long ago, I think 2 weeks ago, where I talked about different strategies. There's only four. The first two were just general questions like this. 2 weeks ago, I did one where I discussed a lot of different option strategies, and then this last week I did the wheel. So here's all of these. You can just check them out. They're a little long and stuff, but you can fast forward. Hopefully, the audio's decent. And yeah, anyone is free to use those. Hey, give me a subscribe. Okay, so Gio, you want to know which one makes what I decide to use? I think it's just more than anything with different structures to put on, different strategies. I'm just looking at I have favorites that I like, and we look at I have a list here because I did it when we did the video. And so I have a list here of these ones in the bottom here. These are new. These are from actually Meiji within the kingdom here. But I have a few. This is a shortened list. I mean, and there's so many more you can do, but I kind of think of all these. I mean, and go through what do I like to do, and what's my assumption? What is it? A high IV, low IV? All these things to kind of determine where I want to go and what I want to put on. And a lot of it has to just do with, hey, you really like these, like straddles. I don't really like them, but maybe some people do. Strangles. I don't love being naked on the upside, so I'll gravitate towards the jade lizard instead of a short strangle because my upside is, unless I do it with a covered call, my upside is capped. If I do the jade lizard with a covered call, I'll do that because then my upside's capped and my downside's capped because I'm hopefully routing for credit greater than the width of the credit spread. I will do strangles when for covered shares because maybe I'm okay with buying more shares at the put side, and I'm happy with selling my shares at the long side, or the call side. Oh, do you looking on my TV and stuff? Yeah, and hey Gio, the other TV, the other video I did might help a little bit. The one that I did like 2 weeks ago. Take a look. Um, yeah, also rolling sushi here talking about option strats, a good one to look at too. That's helpful. And then bone, I will get back to you when you say do you regulars first. Okay, we'll go back to rolling sushi. Any noticeable trades this week that worked out really well or not too well, and care to share any insights so we can all we'll start there. Let's see where's closed. So I closed this. Let's see, we had a few good ones today. And some of them I could have got more money out of, but hey, that happens and we move on. So we look at like so and this NEEE trades one that worked out really well. I don't even know Next Era Energy, never heard of this company. Meiji brought it to my attention was like, hey, I think they're going to be moving directional. I was like, okay, looks bullish. Maybe it's a good idea for a call diagonal. So I went in the call diagonal. I spent $2.47 to open the trade, and I was able to close it for 415 in 3 days. So I made 168 bucks. I mean, if we look at that, I could have actually made a little bit more if I waited, but 168 bucks. It was like I forget what percentage. I think it was like 60% in 3 days. Like I'm going to take that and move on. So that's a successful one. Corn. I did a diagonal in corn. That was a follow from people at Tasty. That one also did very well, and another one where I closed it probably a little too early, but once again, I made 150 bucks in 3 days. I could have made closer to like $200 in 3 days, but once again, we'll take it. I like that one. The other one was Pepsi. I went with Pepsi because the Cube Master was talking about how he liked Pepsi. I wanted to go my way and just go short term, and was like, I'm gonna do a call diagonal in Pepsi. Paid $4, closed it for 5 today. What has not gone well? Let's see here. Okay, well we can look at some of these are rebounding, so it's kind of hard to say, but we can look like CMG. So Chipotle, I opened this diagonal in Chipotle. Um, Opened it 21 days ago. Chipotle was at when I opened this, Chipotle was at 46.44. And so I was like, okay, Chipotle is probably going to keep going up. So I bought the 45 in September and sold the 50. After that, Chipotle went pretty down. I mean, not like terribly, but it's moved down since. It was down to the 40s, low 40s. I sold the 50, so I'm hoping for a directional move up, right? And you know, I- it did not happen, but my max loss is 270 bucks. That's a max loss I'm willing to accept. So I decided to sit on it. We even looked today at it. HG was brainstorming with me, and it was like, yeah, it's not really worth the credit to allow the 15th, this $50 call expire and to sell just for 20 bucks to in the September to turn it into a vertical. It wasn't worth it. Like I'm gonna get 20 bucks today. It only reduces my max loss to 250. Still not really worth it to me. So it was like, you know what? I'm just gonna play for the upside move in Chipotle. And once again, I opened this trade knowing, hey, I'm accepting this max loss. Someone could have decided, 50%, I'm gonna close this out. That's okay too. Um, yeah, I think when you're saying, yeah, I mean that's one that didn't go well. I mean, we looked at like, let's see, my GME, we we did a roll basically where I let the $25 call that I sold in GME on August. I did a calendar here. I allowed it to expire today, and then decided to sell a, a $30 call in September because I already bought a 25 for the calendar and received a $47 credit today. So, that reduces I originally opened it for $1.31 debit. I received that $47 credit to sell the $30 call in September. So I reduced my max loss to $84. And now I'm just going to let it ride. We're going to see what happens. Another option was to not sell this and just let it ride it with $1.31, which I think Mr. Galaxy in the community did because he followed this trade. Um, so then another one that was not going very well was NVO. Um, Same thing, put it on. NVO dropped. I bought the 55 and sold the 6. Bought the 55 in September, sold the 60 in August, hoping for a directional move up because it went down. It continued to go down. So then today decided to uh, put it on for $2.27 debit, received a $60 credit to then sell the 60 against this. So reduces my max loss to $1.67, caps my max gain more definitively, but hey, why not roll the dice and save some money? So rolling sushi, if there's more to that question, please let me know. What do you prefer when it's high IV event like FOMC, more directional neutral, or is this what Gio just asked? So holy hexor, you know, I'm a long-term trader. I So like yeah, it might be FOMC day, maybe I decide not to do a trade, but almost all of my trades are going to be in the 30 to 60 DTE time frame. Sometimes I'll go a little longer, sometimes a little shorter, but I go further out. So like a high IV event doesn't necessarily influence me than other than maybe going, okay, maybe I want to wait for that event to pass before I put something on for the day. But I don't I'm not going to go and do a zero DTE neutral trade or directional trade because of FOMC. Just not worth the risk to me. I mean, sometimes I might. Sometimes if I can find something, it's a low risk, and it's like, hey, I spend $100, I could make 1,000. Sure. But so I'm not necessarily playing binary events other than earnings sometimes. And yeah, holy heck, so they came up with some wild names. Zebra, Jade Lizard. Those are both by Liz and Jenny. And yeah, I don't know how they come up with those names. Wild names. Bone. Do you do regular options? I don't know what you mean by regular options. To me, regular options could mean buying calls, buying puts, selling calls, selling puts, or you might just mean buying calls, buying puts. I am not typically a buy a call, buy a put. That's all I do. Doesn't really work for me. I like spreads. I like capping my max loss. I like maybe capping my gain. It just makes me feel like in more control, less stress. Um, I've tried swing trading. I've tried regular day trading. It's just not for me. There's nothing wrong if you want to do it. Definitely plenty of people in the kingdom who do it. Um, yeah, I started off with the wheel. Is how I started about 3 years ago, where that all that strategy is selling puts and selling calls, selling cash secured puts, selling covered calls. So that's in terms of regular. In my opinion, that's a regular options where there's not spreads. It's a level one, level two option strategy. Um, that's how I started for sure. Uh, Nuclear X, there is supposed to be sound. I hope other people can hear me. That's a problem. So yeah, please, I'm just talking to myself. I hope that's not the case. Okay, so since this is piggybacking on, do you options? Um, yeah, it depends on what your strategy. You just need to look at cheap tickers. You look at I don't know what your portfolio size is, but like SoFi is a relatively cheap stock that's pretty good for the wheel. You got these miners, Marathon, Riot, Nio. That's a good cheap one for it. I don't know what your account size is like. I mean, Hims could be. Bowl's a good one too, very cheap, good premium. Um, I'm trying to look at other ones for you here that I have done in the past. I'm not. That's the nice thing about spreads is that you can use low buying power and play with these bigger tickers because you're only going to use 200, $500. You can play you can play around with, and I don't know if you have level three in Webull. You might have to know what your account size is. It might be a whole thing. Um, And if you have follow-up questions, Bound, oh, so you're typing, so I'll wait on that before I go to Holy Hexor next. Glad to hear you're listening, Swing. I saw your question. I will get to it. And Holy Hexor, I got you next. I just want to get Bones follow up here. Okay. Yeah. So it's in the video. What I do the wheel differently. I don't know if you've used other discords like Theta Daddies or something, but let's just look here just real quick while you're here, and I don't mind repeating myself. We'll look at Marathon since it's cheaper. For me, and I explained this in the video, but I'm happy to repeat myself for you. 3060 GTE. I trade monthlies because that's what I do. The highest I go. Now you can be more aggressive. The highest I'll go in a Delta is 32. Sorry, that's not the Delta. 16. The highest I'll go in a Delta is 32 though. I want I don't want to go greater than 32. That's just from a probability standpoint, it is less likely that you're going to get hit at a 32 Delta. Not necessarily true. It will get hit. There are times it will get hit. But the main thing is I look for 30, 32 Delta, but then the other main component is I look for a 2% return on my capital. So in terms of a cash secured put, that's going to be your strike times 2%. So if we look at Marathon as an example here, well, you can get 2% on your capital around 13. So you could even go for a 16 Delta, even safer out of the money Delta to sell a cash secured put on. You're getting over 2%. So like 2.5%, something like that. Not quite 2.5, but you know what I'm saying. So I explain more of it in the video, and I'm happy to answer more questions, especially if there's not very many questions coming in. So don't hesitate. Um, but yeah, I think the way that I do the wheel, especially like Theta Daddies, I think they do like weekly. They're kind of aggressive, not bad aggressive, but um, I do one contract. Like I said, only looking for 2% return. And then also make sure you're trading a ticker that you want to own. That is the most important thing. Don't trade something just because it's got juicy premium if you don't like the company. Because you don't want to be, in the case of an event where the stock drops and you're assigned shares, you don't want to be sitting on shares of some junky stock you don't care about. You want to make sure you're on a stock that you're like, I believe in them long term. I'm happy for that. Okay, no problem. Um, okay, bowl and so far, those are great. I mean, just to show you bowl, since you're and you could even hop into the video. I think the explanation in the beginning only lasts like 20, 30 minutes, but you can hop in the video real quick and come back if you want to ask questions this week. But yeah, you look at bowl here. It's a great one. So if it drops and you get assigned shares at 12.50 and you're happy with it long term and it sits at 10 for a while, well, at least you're holding onto shares at a price that you're happy with a stock that you want to own long term, and you got a good return. You're getting 48 cents on a $12.50 strike. It's almost 4%. So, it's of course earnings are coming up, so implied volatility is going to be elevated. But the important thing is stock you want to own long term for sure. And if you got some time to go watch that video, you can come back and ask questions. I know I'm probably using terms and try my best here. So I'm sorry if I confuse it. Okay. Holy heck. When building on an option strategy, how many questions do you need to answer first? I ask this because if a user just answers those questions on the website, maybe AI can recommend a suitable strategy. Hey, that's a good point. There aren't very many questions, and even AI, you might be able to say like, "Hey, I'm looking at do putting on an option spread in bowl for the expiration of September 19th. I think they're going to be bullish. What do you recommend?" But I think, yeah, I mean, the main thing is you want to look at IV, you want to look at liquidity. Skew is something you could play into too. But definitely this is all it's not, we're not doing rocket science here. It's all, it is something that ChatGPT or whoever, Gemini, whatever you want to use, could help you with for sure. Easy. Um, did that answer your question well enough, Holy Hex, or you can ask more? And Bone, you're no problem. You're welcome for the education. That is what I'm here for. I want to try teaching you all. I want to teach you all how to fish. I don't want you just to blindly follow my alerts. I want my alerts to be educational and like, okay, what is he doing here? And then how does he manage it? All of that. You can also follow my alerts if you'd like to. There's no problem. I'm happy to have it, but I also love them being a learning opportunity that you just kind of watch from afar, even. Because buying calls, buying puts, there's more to it than that. Even just selling calls, selling puts, there's more to it than that. And so, swing. What do you think of Nokia? Technically, a penny stock under five. I'm wondering if spreads are workable, something that small, 4 to 5 range, from what I recall. If you look at Nokia, which I think is an okay, then why did you say OR or DW? Swing. But if you look at Nokia, now sometimes when we go this cheap, spreads can be hard. Liquidity, not terrible, but you're going to go very close to the money because you look from the $4 strike on the calls is a 73 delta, and the 450 is a 19 delta. And then on the puts, the 450 is an 80, the 4 is a 24. I'm glad that answers the question, Holy Hexor. And then swing. Yeah, I'll play around. Swing, do you have a directional assumption? Is she even in here anymore? No, Hannah left. Well, when Hannah gets back, we'll go back to her question maybe. I'd like to know what her directional assumption is. Because you could, I mean, technically, low IV, let's say you're bullish on Nokia, you could spend 40, 50 bucks, do a zebra. That's a tenth of the cost of to own the shares. And if Nokia climbs, which I don't know if I'd get on Nokia because what the heck do they make anymore? But hey, for 50 bucks, you got a low risk if they pop. So Hannah, you could do it. It's sometimes harder with the penny stocks. I know you're not here, but when you come back, maybe we'll ask. I don't know what the heck RDW is. So she throws out some weird stocks that I've never heard of. So Red Wire, okay, never heard of them. We could look at it when you get back here, maybe if you ever do. They make people poorer. Well, if you own their stock, they definitely do. Okay. Own. I told myself I won't follow alerts if I don't understand why I'm doing it. So I'm just in the Discord to learn for now. Haven't taken any alerts just yet. I think that's a very smart thing to do. I know, in terms of the swing trading, day trading alerts, I'm not taking them a lot of time. I get hesitant with them. I also find sometimes it's like, okay, there's five I've seen. I'm going to follow this one. And somehow, for some reason, the one I follow is the loser. And I don't know why, luck of the draw, I guess. Um, so I totally understand. And it's very smart of you to wait until you understand what is going on because otherwise you're not setting yourself up for success and being able to do it right. I think all of us here want you to be able to learn how to do it on, not have to rely on others, take analysis, whatever people use to, we want you to fish. We definitely all want you to be able to learn how to do it without us, sitting there telling you exactly what to do. If there's any, yeah, follow-up questions on that? Oh, are you talking, gee, were you saying RDW makes people poor or Nokia makes people poor? Okay, so Bone, yeah, Nokia does make people poor. They were cool in the early 2000s, man, when cell phones were new. Uh, Not sure if you answered my question at the top there, but what do you think is the best way to grow an account that's low risk? Like if I had 15K investing account, what would you do, shares or do the wheel to grow? I think it kind of depends. I mean, so think about it. You have $15,000. You could do shares. That's totally fine. You have a 50% probability of profit. own you own the shares. It could go up, it could go down. If it goes down, you lose money. If it goes up, you make. The cool thing about the wheel and cash secured puts is that you're sitting, if you start with cash only, you're sitting on SoFi, let's say, and you're like, okay, you know what? I'm happy to own SoFi at $21 if that happens. So it allows you to be paid today. You're gonna open this trade up, let's just say. You're gonna receive $53 today to agree to buy SoFi at $21 if it drops below $21 by September 19th. So you are basically being paid to buy shares. And the nice thing about this is it actually reduces your cost basis. So instead of buying shares at $21, you're actually buying shares at $20.50 roughly, because it's going to be $21 strike minus credit received. And so it's a nice way to kind of find a stock. Like you might be like, "Hey, you know what? I don't really want to buy SoFi at $23.77, but I would buy it at 21." And so it's a way to buy shares at a cheaper price that you're happy with paying. And of course, it's hard once it blows past your strike. Do you still want to pay for that price? Well, you gotta be a robot and decide, you know what, I agreed to it. I'm gonna go for it. But I think I think both might be the good answer there. It depends on what your time horizon is. Like if you're like, hey, I want to grow this and I want to buy shares and not look at it for 10 years, shares all the way. If you're like, you know what, I want to make some short-term income and just allow it to grow over time in that way, probably the wheel or something like that. Because like with the wheel, like I said, I'm looking for about 2% on my collateral, on my capital used about every 30 to 60 days. If you think of it in 30 days, that's 24% return, assuming everything expires 100%, and all that. That's a 24% return in a year. You're not getting 24% return on your bank account. It's not sexy. It doesn't sound amazing. You're not rolling in cash. But hey, 24%, like your bank account's not going to give you that. That's a pretty good return over the year. Of course, you're not going to get exactly that, but I think, slow and steady wins the race. And so maybe you have a long-term portfolio and you have the wheel. You could kind of play around with that like that. The only thing about the wheel, and this is same with buying shares, is you're not protected against a black swan, gray swan event. If we start declining, you're assigned shares at a high cost base and it keeps going down, which is unfortunate. But if you pick reputable companies that you're happy with owning, you're okay sitting on those shares. So I hope that answers that question. But if not, please ask some follow ups. Now, Rolling Sushi, can you go over the trade on UPS right before the market closed? You're welcome, Bo, no problem. So I opened a call zebra on UPS. Now, I will say, um, I did kind of get this from someone at Tasty today. I was watching their live stream. He hopped in it though, I think a long time ago. Like I think he hopped in it when it really got beat down about his first year. But I was looking at the chart just briefly. I liked, I saw how they went down quite a lot and they're starting to go up. And I feel like there's still some room to the upside. If you look at like they were at 100 a month ago, not even half a month ago. I see some like return to the upside. So my rationale was, okay, let's do the zebra. It's going to cost me 815 bucks today, which is a tenth of the size roughly of owning shares. So instead of spending $8,850 to buy UPS shares, I'm spending $815. Um, so that's good. I chose now Rolling Sushi. I chose the zebra because cheaper, $8.15, one tenth the size. Then I am long. I mean, it's not exactly 100 deltas. I'm long 92 deltas on this now, right? So basically, almost a dollar for dollar. If UPS goes up 12 bucks, that's $1,200. So I like the upside potential. Like I see UPS getting back to 90s, 95, 100, hopefully in the short term, and that's why I went to October over September. Give myself a little more time. And so if it goes up, let's just say it goes to 100, 88.5, roughly, times that by 100 deltas. I mean, that's a $1,150 gain. I spent $850. That's 300 bucks. Did I do that math right? Yes. So that's, did I do that math right? Is it times 1,000 instead of 100? Because if you got, just a second, 100 deltas. No, there's no way. It's just 1,100. Anyways, so I liked that upside opportunity to walk away with some money on UPS. I think that answers your question. Why did I choose the zebra? I guess instead of like a diagonal is I don't know. I just a diagonal wouldn't be a bad bet if you want to do less money. A diagonal is $2.27. Not bad. I think I went with the zebra just for the higher upside. So if I did the diagonal, I'm kind of capping at 250-ish, 275-ish. Not exactly because it could go above five. Whereas a zebra, I'm not capped. I have unlimited potential of this. If it keeps climbing, unlimited profit potential. I liked that upside, and I was willing to take the risk of $815 instead of 200 something. Yes. Let's see. Oh, and sushi. We'll get to that. Just since Gio's asking about UPS, I'll hop on that. Gio, let's look a little longer term on UPS here. Yeah, look at what how long ago this is. This 20. Yeah, what the heck? Come on. Let's look at this. Just a second. 5 years. Yeah, I mean, I see what you're saying here, Gio, which I guess they haven't been public that long. Yeah, not a great trend overall. I see what you're saying. I would say the only catalyst I see in the short term is, if we go shorter term here, in the short term, the catalyst I see is this to me looks potentially oversold. Like there is an opportunity here that they at least rebound. Not they're not going to go to 120 in by October, but I could see them going up to 95, 100. The catalyst is I don't think anything other than oversold, in my opinion. This is a strong reaction. This is a chance for them to go up. UPS, yes, they've lost business from Amazon, but they're still they're a big uh, logistics company. Would I keep them long term? No, I probably wouldn't buy it long term. I don't know. That's a good question. I don't think there's anything wrong with buying them long term, but that's why I chose this trade instead of just buying shares. So I'm taking a 63-day bet for $800 instead of taking an indefinite bet for 8,000, almost $9,000 if I'm buying 100. So, I don't know. I don't, you, of course, every stock there's an argument that, they- but I don't think UPS is going to zero. I think that they'll probably have to figure out what they're doing. We got to make some decisions. I think for the short term, I feel like oversold, chance for them to come back up a bit, and then I profit from that and move on. Right now, rolling sushi. Are there a handful of structures that you like to keep going back to that are easy to implement? So yeah, we look here at the my strategy list, and like I said, these are short, but I like just a naked put or cash secured put. That's always a great one. Simple, easy. The synthetic covered call is one that I've been thinking about, which is an in the money put. Not one I've done a lot just because it's a little bit riskier, but it is a good way to you get a little more premium and you're making an upside bet. Leaps are definitely one that I'll play with every so often, but I'd say these aren't really helping. These aren't really. It's not really answering your question. What I go to a lot of the time, I like diagonals. I like jade lizards. I like zebras. I like put ratios and call ratios. I like covered strangles if I'm going to do a strangle. I like synthetic stock sometimes. I like crab is kind of nice. I haven't done a lot of crab. I want to start doing more. Crab is basically a butterfly, but you buy the an in the money leg with a further dated expiration. So just to show you UPS, sure, let's not do UPS. Let's do Tesla. No, Tesla got too much going. Let's do. So if I was directionally bullish, you would buy like an in the money 95 and then in October, and then go to September and sell. Let's just say, just throw one out there. Sell two 105s and then buy 115, 115. So look here. So it's like a butterfly, similar thing, but your max loss is your debit paid, and then your max profits if you pin these shorts. But it's kind of nice because it gives you a little more time for it to develop with this in the money longer dated call. So one I haven't done a lot of just because it can get a little expensive, but that's one I like too. The risk reversal, I know we've talked about that one. That one's not bad. It's not my favorite. I mean, broken wing butterfly, I like sometimes, but I'd say I really am lately gravitating towards diagonals, jade lizards, zebras, strangles, and ratios more than anything. Naked puts aren't I will do every so often. But I'd say like these are the few that I like. I'm looking, I'm putting on the structure. Um, in terms of directional, diagonals and zebras are to fit that mold. Ratios can be neutral, which I like, and then if I'm neutral, jade lizard strangle is where I'm gonna go. And a lot of times, if I instead of doing a covered call, I'll just do a strangle if I'm happy to own the shares at the put strike because I just choose the premium. I'll also do a jade lizard with my covered calls sometimes. You have a great weekend too, Bone. No problem. Happy to have you here. Thanks for joining. Welcome to the kingdom, also. Rolling sushi. Did that kind of answer your question? I think you and I talked about this yesterday. It's like there's a long list of what you can do, but I feel like everyone kind of gravitates towards ones that they kind of keep in their back pocket. That could be a short vertical spread, a condor. It's just like someone could have a directional assumption. And they could be like, "Oh, I want to do it. I'm neutral. I want to do a strangle," and you could be like, "Yeah, I don't really want to do a strangle, but I'll do an iron condor, yeah, or a jade lizard." Or someone's bullish, bearish, they want to just buy a call. Like, well, instead of doing that, I think I'll do a dial. I think that I think it does. And then yeah, if GGGO, you're welcome, Rolling Sushi. Happy to have you here. Thanks for the weekend. Um, yeah, if anyone has any follow-up questions, or any other questions, please don't hesitate. Trying. We don't have a lot of people here, so and if we don't have to take. I've got till 7 o'clock Eastern, but if we're done early, we're done early. So don't feel pressured if you don't have questions. All right, you have a good dinner. Well, thanks for coming by. But yeah, I mean, I'm happy to keep answering questions for you, Gigi. Holy Hexer. Oh, it's midnight. Yeah, you should go to bed. Thanks for joining. Thanks for being a paying member too for me. I appreciate it. Yeah, go get some sleep, man. Thanks for coming. Gigi, you got any questions? It might just be you and me. And if not, hey, I'm happy to be here. But hey, I'm also happy to spend another hour just with you if you want. You tell me. Gigi might not be paying close attention. Yeah. Thanks for coming, Holy Exor. Appreciate it. Gigi, do you have any questions? Any questions? You also. Oh, thanks, Holy Exor. Yeah, it was not. Yeah, it was all figured out. Thank you, Belle. It was, I wasn't feeling like putting much on that day anyway, so it worked out well. But thank you for your wishes there. I appreciate it. Gigi, if you're listening, you got any questions? If not, we can end this. It's up to you. But I'm happy to keep answering. Because it's just you and me, my friend. But if you are not having questions, we can just wrap it up, I suppose. Sounds like a lot of people have some plans today. That's great. It's Friday. I don't see you typing or anything, so I'm feeling you don't have questions, but I will give you a minute or two just to see. Otherwise, we'll end it early. All right, GG. I don't see you responding in here, so might have to wrap it up here. Okay, GG, I think we're out. But hey, thanks for coming. Have a great weekend. Appreciate you coming in. Well, everyone, that was another week Q&A. It was a little short one this week, but hey, happy to do it. And once again, this is not financial advice. I did not state that at the top, but this is not financial advice. This is for educational purposes only. I am not a financial advisor. But hey, if you're looking to join the kingdom, please come on down. I have a link to my WAP in the description of this video. It has a 3-day free trial. So, hey, come give us a try. It's a fun little community.